Hey everyone, Fisker stock investors got some great news today that sent the stock price soaring almost 20% on the day of the announcement. So I'm going to share with you what the announcement was, why the stock price increased, if the stock price increase was justified, and a little bit more about Fisker's prospects heading into 2024 and 2025. So stick around, let's jump right in for this exciting news.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, the news that came out was a December 2023 business update where Fisker said deliveries grew by over 300% from the third quarter to the fourth quarter. Fisker has so far produced 10,142 Fisker Oceans and approximately 4,700 have been delivered. Now, my first question arises, why is there such a big gap between how many they have produced and how many they have delivered? Are they having difficulty selling these models, or is it just a matter of these vehicles being in transition, being delivered? So that's my first question. Moving on, Fisker management saying that they have a solid business with relatively low overhead. And I'm a fan of this model, at least to begin with. Fisker outsources production. They're not manufacturing their own cars, they're outsourcing it. And that means they didn't have to spend as much money up front to get their business rolling, to get their cars out, to get manufacturing going. It would have been much more expensive if they were to bring that in house. Now, later on, they could bring it in house. Let's say they grow and they've grown to such a size that they say, you know what, it would be cheaper if we develop our own manufacturing instead of outsourcing it. They can still choose to do that. One EV company that recently made a similar choice is NIO, the Chinese EV manufacturer. Well, now it's a manufacturer, but before it was doing the outsourcing model as well. And just in its latest quarterly update, it said that it purchased its manufacturing partner and now it's going to bring it in house. Fisker could do the same thing later on if it grows to a sufficient scale where it feels it would be prudent to bring manufacturing in house. It can still do that, but for now, to get itself going, it's outsourcing, and I like that. It's a less risky start because already starting a brand new electric vehicle company is very, very risky. So you want to find opportunities to lower the risk and increase the chances of success and survival. And then you can always work on those things, bring it in house, and improve efficiency later. So we already discussed they grew deliveries by over 300% from Q3 to Q4. Total deliveries are approximately 4,700, with the majority being the Fisker Ocean 1 launch edition, priced at around $69,000 and comparably priced in other markets. In December, the UK saw the first delivery of the Fisker Ocean Sport. That's the entry level trim, the lower priced version. That's the one that I feel can get more mass market adoption because of the lower price. It makes it more affordable. More individuals could potentially purchase it, whereas the $69,000 option is on the expensive side, and consumers might choose to opt not to buy that. They might not be able to afford it. And so, with the lower price model coming out now and being delivered, that could spur further sales for Fisker. The company has opened 4 flagship lounges in Los Angeles, New York City, London, and Munich, and has multiple delivery and service locations in both the US and Europe to bolster the company's delivery infrastructure. This is where the company has had a lot of trouble. Now that it ramped up production, it had trouble delivering those cars. It was making the cars, people were buying them, and they didn't have the infrastructure in place to get the cars from the production facility to people that bought them. And so now it's having to increase its sales force, increase its infrastructure, increase real estate so that it can have better logistics in delivering these cars. And a good place to start is Los Angeles, New York, and London, Munich. These are populous cities with plenty of wealthy citizens who would be interested in buying these electric vehicles. And they have the charging infrastructure in those cities as well. You think about some of the rural communities around the world, they don't have as developed a charging infrastructure as Los Angeles or New York City, right? So it's a good place to start and then branch out from. So this is a good strategy, getting in these cities, getting a presence, a physical footprint in these cities. And in January, the company intends to announce a plan to further accelerate sales and deliveries. So overall, an optimistic business update from Fisker. Lots of good items to note here, including the increase in deliveries, the start of deliveries of the lower priced model, the increase in the real estate footprint. All in all, you can understand why the stock price was up 18% on the day of this news. 18% increase on the day of the news. But remember, Fisker is a volatile stock. It goes up and down by a wide margin on a daily basis, on a monthly basis. In fact, so this is the daily chart, 18% up. But if I zoom out and go 1 month, the stock is down 3%. If I go out 3 months, the stock is down 72%. If I go out 6 months, the stock is down 65%. Year to date in 2023, it's down 75%. If I go back 3 years, the stock is down 89% off its high. And I don't think we can go back further. Well, we could go back a little bit further, but the stock is down 85%. So the stock is down when you look back longer term, but for the 1 day, it's up 19.5% as I'm recording this right now. So you can understand the pop up higher after the stock has been so beaten down. In fact, the chairman and CEO had to address this on December 6th. After the stock price had fallen by so much, he comes out and says, you know what? And this is Henrik Fisker, the CEO and chairman. He says, I believe the negative reports about the company have been overblown. The Fisker team are shareholders, and I am a significant shareholder in the company as well. I believe the current share price does not reflect our accomplishment and our long-term opportunities. In other words, he's saying, I think the share price is undervalued. I don't think it should be so undervalued. I think the price should be higher. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.